Thank you for joining us at XM.com for this Forex Preview video. We're entering a crucial week for the United Kingdom as important data releases, employment and inflation data are coming up just before the announcement of the new budget on Thursday. I'm Cristina Marujos. Joining me today is our senior investment analyst, Geralabos Pisuros. Geralabos, despite the United Kingdom economy shrinking by less than expected, investors maintain bets that the Bank of England will not be too aggressive at its next meeting and raise rates by only 50 basis points. Could this week's data bolster market expectations?
Hello, Christina. In my opinion, market participants will keep their 50 basis points hike bets. Yes, the economy contracted by less than expected in the third quarter, but we had a bigger than expected contraction for September, which may have been interpreted as setting the stage for a worse fourth quarter. Though the number may have been exacerbated due to the standstill in economic activity around the time of the Queen's funeral. Now, tomorrow, the jobs report is forecast to show a steady unemployment rate for September and accelerating earnings excluding bonuses. Nonetheless, with an inflation rate at 10.1% during that month, real wages likely stayed well into the negative territory, and disposable incomes at record lows. Therefore, investors' concerns over a worst fourth quarter are more than reasonable, and Wednesday's inflation data have the potential to enhance those fears, as the headline rate is expected to have continued to rise to 10.8% year over year. Although higher inflation usually means faster hikes by a central bank, at its latest meeting, the Bank of England has shifted its focus more on the wounded economy rather than to inflation, and thus accelerating consumer prices are unlikely to prompt investors to ramp up their rate hike bets.
Now, after the intense political turmoil, we'll finally get the updated budget by the new government on Thursday. What are we likely to see in those plans?
The new government wants to tackle the nation's budget deficit, and thus the agenda will most probably contrast with the plans announced by Quarteg, as abolishing the deficit may require spending cuts at levels of austerity like in 2010. It has also been reported that Chancellor Hunt will announce a limit of 2% to public sector pay increases and a freeze to various tax thresholds, including income tax. Considering how high inflation is, the former will result in further declines in real wages, while the latter will drag more people into higher rate tax brackets as their nominal salaries increase. With regards to corporate taxation, Hunt has already confirmed that the rate will rise to 25% in April next year. So, all this implies downside risks to the Bank of England's already lackluster economic projections, as officials were not able to include the potential impact of the fiscal agenda in their November calculations.
So taking all of this into account, Geralabos, is the pound headed for a positive week?
Now, expectations of this week's events keep the risk of another round of selling in the pound firmly on the table, despite pound dollar rising above a medium-term downtrend line on Thursday. That was more due to the dollar weakening on the US inflation data rather than the pound strengthening. So, with the Fed still being considered a more hawkish central bank than the Bank of England, and the risk of a new flare-up in global growth concerns anything but vanished, any further advances in pound dollar may stay limited. For now, though, a combination of more weakness in the dollar due to increasing hopes of a less aggressive Fed and further improvement in the broader market sentiment could help the pair appreciate for a while longer. The break above the downtrend line drawn from the high of February the 23rd may allow advances towards the psychological round number of 120, and if the bulls are not willing to stop there, then the rally may continue towards the 120-95 area.
Geralabos, thanks so much, and thank you for joining us at XM.com for this Forex Preview.